When it comes to investing, there is nothing new under the sun, as the saying goes. But at the same time, there are constantly new things coming up and new ideas and new ways of doing things. And and the reason why I say there's nothing new under the sun, because ultimately it comes back to several key principles and key ideas. It's just kind of getting wrapped in a new wrapper, so to speak. One of those is what I would call alternative strategies. And so this is anything outside of your typical investment, either stock, bonds, or cash type alternatives. And so the reason why it's alternative is because it's just outside of those uh, more readily available investment sources. And so I'd like to go through several aspects when it comes to alternatives. The first thing is, what are alternatives? Like I mentioned, alternatives are is anything that's not a stock, bond, or cash type investment. So that could be real estate, could be private equity, venture capital, commodities, currency trading, options. There's all different sorts of types of strategies when it comes to alternatives. But in essence, what each of these strategies are trying to do is they're trying to take advantage of a less efficient market to generate potentially higher returns. And so this is a different use of capital or a different use of investment than in a stock or a bond, because those are regulated markets. Alternative markets generally are not regulated. Now there are some regulated alternatives, but they're a little bit less common, and generally then those start to really look more like your regular regulated investments. But an alternative really is, again, it's just some sort of alternate investment vehicle that you can use to potentially hopefully have higher returns. And so the second question or second aspect of is what are those returns? What do they look like? Well, results may vary, as they say, but generally alternative investments do have the capacity to potentially earn more than what you would be able to get in maybe stocks or bonds or cash, mainly because they're doing things that are not widely available to everybody. So private equity, for example, that's where there's a bucket of capital and they're investing in companies before they're publicly traded. And because the companies they're investing in are not publicly traded, they have high growth potential because they're not widely available to everybody yet. But at the same time, it's not guaranteed by any means that would happen. Similar with real estate. One can buy some property or buy a house to rent out or what have you, and those can provide attractive returns. But there's more to the story, and that brings me to my third point, which is the risks. What are the risks involved with alternatives? And so we don't want to go in starry-eyed to alternative investing, thinking, "Wow, this is going to be the best thing," because there are generally risks, and bad things can happen, especially in alternative investments, whether that up to and including potential complete loss of your investment. So these are to be taken seriously when one is investing, and you really need to understand your overall picture and your comfort level with risk, because I have heard advertisements for some of these types of strategies where they make it sound like there's no risk. There's always risk involved with investing. And so we need to look at those risks. Oftentimes, that can include, like I mentioned, complete loss of your initial investment, or it could include so the subpar returns even is one of the risk associated with it. But you have to understand that you could basically lose everything when you're looking at these types of alternative strategies. Because, for example, again, like the private equity situation, You put the money into a fund, and there's a manager of the fund, and hopefully they invest wisely. When they invest in companies they think are going to shoot up 100%, but those companies can also go bankrupt, and so there's serious risk there. And because alternatives generally are not public investments, there's little to no regulation over them. So the government is not going to have oversight and protect you. Um, the government is assuming that if you're investing in these, that you understand the risks involved and you're able to take those risks. So not only are you comfortable taking those risks, but are you able to take the risk as well? Because if you do lose all of your investment, how will that impact your ability to do what you want to do financially, both now and in the future? The fourth consideration is the tax implications associated with alternative investments. Again, because these are not um, public publicly traded securities or publicly traded investments, they can come with quite complex tax ramifications. Generally, oftentimes they're structured in the form of a partnership, which has a K-1 form associated with it. So there's some complicated tax implications associated with alternative investments. And the fifth thing is the liquidity or access to your money. Once you make that investment, you have to be aware that you necessarily don't have access to your money whenever you have an alternative investment. Sometimes they give you a period of time where you can have access to the money as short as maybe a year time frame. But oftentimes, whenever you're looking at alternative investments, the money is going to be locked up for 3 years, 5 years, 10 years. I've seen some even all the way out to 20 years, depending on the strategy and the potential returns. And so that's a long time. A lot can happen. And so the amount of money that you're putting into alternative investment, uh, you need to really take into consideration, are you going to need that money anytime soon? And think through all of the different potential scenarios that you maybe would need access to that money. And that will help guide you on your investment decisions there. So alternative investments can certainly be attractive, but there are lots of risks involved, and you really need to be careful in the type of deals that you're getting involved in. Work with a competent advisor, tax advisor, financial advisor, attorney on these types of deals.